How's it going, everyone? My name is the Zoomer Value Investor. I'm here to talk to you today about a really interesting life science REIT, real estate investment trust, that's come across my radar. I've actually have taken a hefty position, about 5% of my portfolio in it at this point. And I will tell you all about it. It's a really exciting opportunity. And you're not seeing it too many of these traditional kind of like value opportunities in this bull market. So this is one I thought I'd probably go ahead and call out and show you my gestalt research on. So what we got here is a REIT or real estate investment trust. Now, Google might not be the best for showing like actual returns on something like this because, as you can see here, a real estate investment trust, this is going to be a very high dividend yielding company, and that comes with them collecting real, rents on their the people they're leasing to, and thereby, they have a pretty hefty amount of cash flow that's semi guaranteed, and that flows into the shareholders. So I think this is a really interesting opportunity because, well, number one, this is a very quality company. We can delve all into that right here. Um, Alexandria Real Estate. This is last year's. This is 2023. There we go. This is the most up to date annual report right here, and amazing company. I'm gonna even show you like some of my favorite slides here. So here you can actually see their long-term value, what they've been able to create for shareholders here. And since their IPO in '97, this has been close to like a 16 bagger about. That's pretty remarkable. Pretty remarkable stuff right there. The fact they're able to get that kind of return for shareholders, and I think there's still a lot to go with, especially the life science industry. And I'm going to talk about who they lease to, some really big names you guys have definitely heard of, and just you'll really understand how there's still so much runway for a company like this with all the innovations that are ahead of us in the life science industry, as well as how this is kind of like a pick and shovel play because what Alexandria owns are the labs to what a lot of these companies use, a lot of the campuses, a lot of the grounds. That's what Alexandria owns. So it's a really interesting, kind of more like a pick and shovel play on, a really exciting industry that I talk about a lot on this channel. Of you got convergence of technologies like AI and biotechnology. You got new wave internet. You got automation. You got all these different things. It's kind of almost making like a convergence uh, that is going to propel like a new kind of like era in technology and the way we do life and everything going forward, for better or for worse. And that's something that definitely not the for better for worse part, but Kathy Wood of ARK Investor really harps on about. But this is a more of like a safe company, a good value. I'll show you all the different financial ratios and stuff and why I think it's a pretty decent value play at this point. Definitely something not Kathy Wood would go near. Kathy would not own a company like this, unfortunately, as great as it is, because she doesn't really manage her risk well. All right. Um, Going on here, as you can see, really great stories about just how they're really a very reputable company. As you can see here, Newsweek actually lists Alexandria consistently. This is actually a second time in a row, being amongst like the top life science healthcare companies in trustworthiness in their eyes, successively. They've won this award more than once now. Pretty interesting stuff. Um, as you can see here, this is at 15 Nico Street in the greater Boston area. So this is Eli Lilly's Institute for Genetic Medicine. Eli Lilly company's been on a tear lately. They've had so many innovative drugs that have come out lately. One is Manjaro. That was one that really comes to my mind. That's GLP-1 type medicine. And if you don't know what GLP-1s are, think of Novo Nordisk's Wegovy, and I know there's one I'm really butchering. Oh, um, it'll come to me. It'll come to me during this video, and I'll let you guys know. Ozempic, that's what it is. Um, and honestly, Novo Nordisk, we'll see that later in the slide too. That's another pharma company that Alexandria's a big player with. So this lab is owned by Alexandria, but it's been leased to Lilly for a long, long time now, and with all the different laboratory equipment, scientists who know where their stuff is, they come in day to day, they do their research, they're experimenting and all that stuff. they don't want to move out of a place like this. Like once they're in there and they're at that facility that's at that high level, that 5-star facility doesn't really cut costs anywhere. Very nice modern design inside outside, like it just does everything it can to be a decent staple place to work at, and it'll have all the complicated resources that go into something like a life science industry. Um, as you see here, this is Binney Street and also the greater Boston area. And, we got Moderna's headquarters. Really interesting stuff. Moderna, that is a mRNA research company. I've talked a lot about Moderna on this channel. If you want to check that out, going through here more. Really, really interesting stuff here and stories here. Yeah, and something I think is I really wanted to point out is, this is a company that's been at it for 20 plus years now. As I said, incepted in 1997. Um, and I think it's really interesting. This really why they're pulling back here. Two major reasons that's causing this tear. From 222, it went all the way down to 88 at one time. I guess that was inter trading day, didn't uh, finish at 88, but I know at one point it's at 80 as low as $88 here in late 2023, and really interesting. You see that violent pullback, but there's really two reasons why a company like this is pulling back. It's not so much something fundamentally wrong with the company, something fundamentally wrong with their structure. Very, I'll show you more about the balance sheet, the kind of like bonds and the risk class this company is in. This is a very well structured company, very robust fundamentally. But what's causing a drop like this? It's not singling out Alexandria real estate here. It's more of a broader market thing. So rate environments matter a lot for something like real estate investment trust, because rates determine a lot of how much that the landlords are actually going to make on their renters. Because in an adjusted rates environment, which we've had in the last few years, rates have adjusted very quickly, all things considered, over the course of the last 5 years. Just think about where rates are at in 2019 versus now, right? So many different adjustments, both up and down during that time. Federal Reserve, obviously, I mentioned this on the channel before, but you're not a good investor if you're trying to predict the Federal Reserve. That's not, and Peter Lynch talked about this a lot in his book, One Up Wall Street. That's not an ideal way to be playing the game. At some point, you're very, very likely to get caught up on that. But if you could do it something like 3 or 4 times in a row and you risk infinitely, obviously you'll make a ton of money for sure. But the odds of that happening versus, obviously going bust, crazy. So, um, interesting stuff here, right? So, what's going on? Okay, the rate environment, that's one. Number two, REITs are really interesting. Their value is based in real estate, but they function as a stock. Because they function as a stock, tradable, trading hundreds of thousands of units per day. This is trades about 700,000, units per day, something like that on average daily volume. Um, it's prone to a sell-off, right? So human psychology and all the different things that go into that comes into play here. And you can see that this, I'm going to show some of other really interesting REITs here. This is Crown Castle. Um, as you can see here, boom, 2020, like this is kind of when they peaked out at around the same time as Alexandria, and then boom, sharp drawdown here. So oftentimes investors and this does, when this happens, especially in something like REITs, it creates a very violent snowballing effect where investors who've been in these REITs for, this is realty income, this has been going on since 94. When they start seeing these pullbacks, they get spooked very quickly, and they'll sell off like hotcakes. So even though we are in a broader bull market where the SPY is above 520 points, I remember when I made my channel, I think it was something like the high 300s or maybe at 400. Just goes to show uh, just how much of a bull market we've been in here in 2024. And um, REITs are really one of the asset classes that hasn't, the tide hasn't lifted all boats when it comes to something like REITs. And I think that, that plays into a bit of a value opportunity there. You're definitely not seeing a ton of momentum here. This is a very nice leg up right here. But we've been stagnating here around the 120 region, and this is about where I have my cost basis. My cost basis is around like 125. Again, about 5% of my portfolio. I will absolutely be down to buy more. If this goes closer to like 100, I think it would floor out somewhere around 100. I don't really see it going this low again, and I will talk about that when I get into the valuation. But again, I just really wanted to mention, you got a broader market sell-off in this specific niche of REITs, and then you have the rate environment, and that's what's been crushing it. It's not so much what's wrong with Alexandria, it's just what's going on with the market. And as value investors, that's something I really want you to keep in mind. This I thought was really funny. You can ask ChatGPT about a lot of different things. It'll tell you actually some really like interesting stuff. And um, we got they talk about. I'll show this in the slide, but just the areas they really do focus in major innovation clusters. Boston, San Fran, New York, San Diego, Seattle. Uh, this talks a lot here about how the labs are very unique and that it's very strategic. Something I think is really interesting, they have a lot of locations in that Baltimore, that kind of like Johns Hopkins kind of like innovation area. And that's one of the most nicest, kind of most lenient tax environments for a life science company to be in. And I'll show you guys some of that here when I go back to the PowerPoint. And I also really like this. You could like, this is really useful if you want to like screen with ChatGPT. All you have to do is prompt it. So you tell it something like, one, tell me a general overview of what the business does. Two, what makes the business unique. Three, who are its competitors. And I really like that because it'll actually tell you right here the competitors. One of these I actually own. I do have a position in Kilroy. They're doing pretty good on that investment so far. I bought that like, I don't know, around like $30 a share, $28 a share, something like that. Um, but yeah, I just think that's what's really interesting. Kilroy definitely is a competitor, but they're more like in the San Fran area. They don't really, and I don't think they don't only lease to life science kind of companies. They're more of just a very like 5-star office space kind of like REIT. And the same with Alexandria, right? Very, very, very high quality buildings. Um, but Kilroy's just a little different because it's really just West Coast based, some properties and like some of that Texas Triangle kind of region. Um, but Alexandria again, all over North America pretty much, and as well, really life science focused. So if we are going to have this crazy bull market in life science, which I do think will happen at some point, a lot of that will be propelled by a lot of spending when the boomers get into their old age, into the technically like what we call in public health, this is called like years sick. Once they get into like their years sick kind of like phase of life, their spending on healthcare will go through the roof. That kind of does trickle down into things like pharmacy and research, a lot of things of that nature. So here we got the valuation page. Love this website, Ticker Terminal. Can't praise it enough. Um, and as you can see here, really, this is why I think it's a value opportunity. Look at these financial ratios, 7.5 versus where this is honestly trended closer to pressing buttons. Dang, sorry guys. This is closer to like 11 or 12. Most of its life career here in the last 5 years, and same thing with the price of earnings here. These are forward multiples. You can go like down here again below 40. You gotta go all the way over here. All right. So, um, like this company, um, like you see here, price sales 7, stuff like that. So it's a really interesting opportunity here. The company does typically trade at a premium. I've talked about this before, but sometimes uh, a company has a reputation that's so good that it kind of can fly above the S&P 500's typical 20-ish or so PE pretty easily. And a good example of something like that is Nvidia. The company that the reputation for that's been going through the roof, and the investor premiums for that's been going through the roof lately too. And these sometimes are temporary, sometimes they're long lasting. You look at a company like Disney, even on the sell off Disney's had, I think Disney's still something like a 30 or 40 PE company. So, and typically, historically, it's something more like a 50-ish or something. So it just really, you got to put things into perspective. I think one of the things that did kind of they did have maybe a tough earnings report lately as maybe why this PE number is so high. But the PE is like, don't put too much stock in that. I had a there's a good video on my channel about why the PE ratio of Amazon is so high, but I still consider it a high value investment because PE will never tell you the full story of things. You have to really look at the three financial statements. You really got to see, um, okay, our PE is high, but are we doing any capital expenditures? Are we reinvesting into the business? These are questions you got to ask because when you do reinvest in the business, you're taking a risk, yes, obviously, but you're also taking that high reward potential. You're not paying taxes on that stuff, so you're not wasting money in that regard. Um, and also, when you declare profits and stuff like that, it's like another like wave of taxes you have to get hit on. Um, for a company as big as Amazon, antitrust is a lot more bigger of a thing. So kind of like hiding those profits is kind of like a big thing. But for Alexandria, I don't really feel like antitrust or anything about be an issue. Again, we got, we asked ChatGPT here all about it. We got tons of like competitors and stuff, Biometa Realty, Boston Properties. I mean, these are just nowhere near the high quality I consider Alexandria to be at. Um, so yeah, really interesting. Actually, let's go back to the valuation. Um, so I kind of want to, yeah, let's go ahead and hop in these estimates here. Let's keep this gander going. Very interesting here. That's honestly, that's pretty stable growth there, and that's about what I would expect myself as well. Just making that money off of that residual where it's like, so they make a lot of their money off that residual where it's like, okay, how much have property values gone up, as well as how much is this particular, company, how much is Moderna, how much is Eli Lilly, how much is Novo Nordisk, how much are they willing to pay to not have to move all their crap, into like a whole new office and stuff like that. So that's really where they make a lot of their money is that desire of like, okay, how much can we raise rents on these guys that's like somewhat fair, but also like really prices in that you're pretty locked in here. You actually enjoy the office. You'd be willing to pay that kind of cost to stay here and not have to deal with moving. Or, maybe you enjoy it has certain laboratory equipment. There's certain fumigation that's, plugged into the building in certain places, things of that nature. That really matters. HVAC, stuff like that, that matters a lot. So, um, yeah, these margins are obviously very impressive here too. Really interesting business, for sure. Um, the financials, I kind of want to look at these. I normally when I like to look at financial statements, I like to look at them at both ticker and because they show you kind of like data stuff here. You got to scroll over. All right, last 12 months. Here you go. Yeah, those change the revenue. This is really impressive stuff, man. Really impressive stuff. Positive net income, definitely lower more recently. Let's see if they've been investing in the business. Sale of assets, interesting. Balance sheet here. Total real estate assets, 32. Total assets, total liabilities. Wow. Yeah. Greater than two ratio, total assets, total liabilities. Very impressive stuff. And I think this is also something I really noted that I thought really, yeah, really, I think it's interesting. So around like this time, late 2020, this stock, you got an 82 tangible book value per share here, right? But this stock was something like a $130 stock, not too far off where it is now, probably a little higher. And here was the peak, most recent peak around like 255, right? 107 on the tangible book value. So that's what I'm saying. Like with the tangible book value, the company's going up this much. I think it's pretty hard to refute that there's like a value investment opportunity here. Um, so yeah, let me know what you guys are thinking right now. But I know I already have my initial position, but the more and more I look at it, I kind of want to just put some of my new investment capital into ARE a little bit more and more. But yeah, just scroll through here, make sure everything looks like it made sense. There was no weird ticker glitch or anything. I've never had an issue with ticker. I just like to see the same numbers on different vetted internet databases. Yeah, that looks right. Really interesting. Yeah, but I like that's what I'm saying, guys. Like, when you got that kind of like assets to cover your debts and liabilities and stuff like that, I look at a company like this. I'm not really worried about a company like this going bankrupt or anything of that nature. And um, yeah, I would buy this thing. I would buy every share I could get around $100. Even if it goes lower, I'd probably still buy it. I don't see it going below the 88 it had. I think that was the peak of the panic. Um, But yeah, guys, I think this is something to get really excited about here. Just trying to look for one more number real quick. Okay, yeah, we're chilling. All right, yeah. So easy and the cash flow statement. But yeah, really robust balance sheet. If there's anything you guys wanted to ask about with this stuff, let me know. But I just wanted to make sure I showed you guys a just all view of what their income statement, their balance sheet, and their cash flow is looking like. And here on the website, there was one thing I wanted to show you guys here. Okay, so um actually let's just finish this PowerPoint. My fault, y'all. All right. So yeah, they've been in the game for a while. We know that. Gosh, my computer being slow. I swear it's because I'm running the yeah, so this is huge, guys. So they're a top 10% credit rating company amongst all US REITs. They're BBB plus, um, BAA1 by Moody's. Like that kind of clout for your credit rating and stuff, that's huge. That's huge. So, while a pullback or something like that, like this could be scary, when I see a quality company like this, I just smell kind of like there's some opportunity in the water here, for sure. So, you got they got increased line of credit recently. They've got their debt is at fixed rate, which means that um, they're very like 98% of their debt being fixed rate. That means that it's very unlikely they're going to have some kind of scare where all of a sudden they have more debt than they think they would have because their debtors were like, oh, because of the cost of inflation and stuff like that, we're actually going to raise your debt and stuff like that. And because that agreement was not made with a fixed rate um, agreement, they can do something like that where they raise the rate on the debt, but that will not happen with Alexandria. Yeah, this is something I think is also really interesting is they do things to raise money, sales of assets, things like that. But because they've been in the game for this long, they're very specialized. They have that track record to prove it. Again, like a 16 bagger over the course of what, like since 97, like 24 years. That's crazy gains, y'all. Like that's like more than a doubling every 2 years. Like guys, that's really good. As you can see, yeah, here's the PowerPoint I really want to show off here. You see Baltimore, tons around that area. I don't know if it's Baltimore specifically, but that kind of like DC, Baltimore kind of area. Tons of life science funding, tax breaks goes into a place like that. So as you can see, of course, they're setting up shops there. Um, you got the Boston area here, around the Texas Triangle down here. Uh, I don't know. It looks like Albuquerque or something. Might be butchering that, but I think Phoenix is a little bit further over here. So, I gotta see what property that is. I'll take a look at that one. Talk about the ones in Southern California. Talk about the ones in the Washington, Seattle area. Very nice stuff. Very nice stuff. Yeah, this is also it's really impressive. They don't, they find tenants like if they're gonna build a building or invest in something like that, like they're gonna have a tenant ready for that. Um, they're not just laissez-faire. They're not like lollygagging. They're not like not having plans when it comes to doing their business. They're top 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 tier facility. Set it up. Call, make the deal. Moderna, get Novo Nordisk on the phone. Um, yeah. They've been cooking, man, for sure. That growth in operating net income is so beautiful. Like Um, I I'd be really surprised if in something like 5 years, the people who sold off during this like panic, maybe not so much the people here are probably good profit takers, but like people like sold like around like here, man. Oh geez, dude. I feel like they're gonna be really regretting that. I mean, dude, that is so impressive that linear growth like that, and to do that on something like your operating net income too. That means you're being very effective with things like EPS, capital management. Yes. See, I love seeing these. So, look how nice these are. This San Diego, this one in Cambridge here, more Cambridge, Cambridge, Cambridge. I hope you guys are following my mouse. Sorry, I'm trying to like kind of wave it so it's like visible, kind of. Cambridge, yeah, Seattle here. This thing is definitely a behemoth, and I feel like with it being a REIT, this is definitely one of those things where it goes a little bit under the radar. I don't think a ton of people on the popular, whatever YouTubes for investing or the popular Reddits of investing or whatever. And I've said a lot on this channel about how like you got to treat those avenues like they are, ESPN for stocks. Even my channel has to have a lot of I'm just some random guy on the internet. You guys don't know who I am, right? So it's definitely in y'all's best interest to kind of like double check everything I'm saying here. Make sure I'm not, I'm because there could be something I'm missing. You never know. That's what makes a market, right? Um, so yeah, they do have what they call their like mega campuses. So, it's not just like setting up a building, throwing it somewhere. It's no, they have like top grade environments they keep for people, like lawns curated, like ponds curated, like outdoor space for people to get out the lab for half hour a day. They really don't get outside. I feel so bad for some of those, but it's their job. They love it. The researchers. Yeah, over 15 years with Lilly, guys. Like that's for real right there. Unless Lilly wants to like throw out because I don't think it's just the genetics building in Boston. I think they have a couple different properties with ARE. So, um, I really don't see Lilly just straight up abandoning Alexandria or anything like that because that'd be a lot of work for Lilly to have to go find a whole new partner who is, that high grade. They could go to someone like Kilroy, but let's be for real. Does Kilroy have as good of a life science understanding for what it takes to set up like a laboratory environment that's 5 stars? They have a good understanding of the heat, ventilation, air conditioning required, the um, fumigation required, the lighting required. There's a lot of finicky things in a research environment you have to have on point. And it's really a lot easier when you can deal with someone like Alexandria, who's already an expert in things like this. So you get into their diversification here. So their annual rental revenue (ARR) and this pie model here really shows it off. It's not as simple as just like a biotechnology or a pharma company is paying them. That's only like a piece of the pie here, right? There's really some other companies who are on different kind of life science niche sectors. to put a little diversity into the ARR, the annual rental revenue that Alexandria is getting here. Novo Nordisk makes his appearance finally after me talking about it for so long in the video. And yeah, but Novo Nordisk, they made a ton of money. It's like Manjaro with Lilly, the GLP-1. I know Lilly's had a lot of other very successful candidates who made it into commercialization recently. They're doing well as well. Novo Nordisk, obviously they've been killing it. You can even look at the stock price of Novo or Lilly. Been going stupid for sure. And that's why, like, I don't have to buy into the FOMO of something like Lilly or something like Novo Nordisk. When a great company that's more pick and shovel and has very legit business with them, has done something like fallen like 50%, honestly, on some stock market psychological sell-off based rationale, which as we as value investors know is opportunity in the water, right? If people are selling on psychology alone, not on business fundamentals. So yeah, this is 19%. This only makes up 19% of their tenant base. Is companies like Novo. I'm not saying 19%. No, no, no. I'm not saying 19% of Novo is going to paying Alexandria. It's 19% of companies like Novo. So Novo encompasses part of that 19%, right? And you got Vertex, so it's a little bit more in the biotech region, not so much in the multinational pharmaceutical. Really interesting. Look at this building that they're in. Beautiful building. Um, it's shaped like the human lungs, which I think was really interesting. You know about Vertex, they're a leader in cystic fibrosis treatment. And there's actually a really touching thing I saw where there was like a mom of a CF patient, and she was talking about this building. She's like, "This is one of the most beautiful buildings in the world. It's like it's not just a building; it's also like you have to understand this is where like innovations are made, diseases are cured, lives are saved." So Alexandria's properties do have that um, element to it, right? Where it is a genuinely human good, like it's a human welfare um, elite place to kind of just be a part of. And the fact that I would love to make a ton of money on an investment like this. Like it's one thing when you make a lot of money on something like, like crypto or like a penny stock or something like that. But when you make a lot of money on companies doing like legit disease curing and human, I feel like it probably must hit different. That's all I'm saying. This is really interesting. So, private biotech. So these are some biotech companies that haven't gone public yet, but they have some really nice campuses, as you can see. And hey, they're paying their rent to Alexandria, so can't be too mad at that. This is more like service device products in the life science industry. Really, really interesting. Millipore Sigma here, talking a little bit about them. There's their campus there. Biomedical and government, really interesting. Again, it just really shows that it's not as simple as like, okay, it's all the companies like Novo, so it's like Lilly, Novo, no, 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 it's not that simple. There's so many different pieces of the pie when it comes to the revenue for Alexandria, and a little bit here about their corporate responsibility. Um, I feel it, man. These slides look really good. You got to get the ESG money. You got to get that rating from Larry Fink, man. I feel it. And it looks good out here. Y'all cooked on this for sure. So yeah, good stuff. Definitely check out all this as well. But more importantly, I think this is might be their 10K. Yeah, it's their 10K. Yeah, I actually have that pulled up right here. It's nice that they included that at the end of the thing. But yeah, so this is a 10K. I'd really, if you're gonna put large, legit amounts of money in a stock like this, or any stock for that matter, honestly, you should definitely put some time into reading a documentation like this. Um, Now, I personally think most of the meat and potatoes comes in these like later sections here. Um, but I just want to really make sure this is on your guys' radar that when I'm talking about a company like this, it's like this is what Warren Buffett spends a lot of his time reading when he's spending his time on investing. Is he's actually really sifting through these 200 plus page type documents like 10Ks, um, and just kind of checking the boxes, making sure things make a lot of sense. So just really want to put that on your radar. Uh, but yeah, that's all I had for Alexandria. I think this is a really interesting opportunity, y'all. Just keep in mind that you're buying this at something like a tangible book value of like 1.1x, right? Like the price to tangible book value is like 1.1x. It's almost at tangible book value right now. And at a time like this here in like the start of 2022, a company like this had a tangible book value of like it traded its price to tangible book value was like 2.1x. So there's a lot of price expansion possibility there with just the investor premium. I think a lot of that will return to Alexandria as strong as ever once we're just in a whole new rate environment as well as environment for REITs. And like when you're in a bull market like this, where SPY's at 520, QQQ is going to all-time highs, stuff like that's happening. It's only a matter of time, I think, until tide starts kind of lifting all these boats, and it's kind of difficult to invest in a bull market like this because I'm a value investor. As you guys have noticed, I've probably been a lot more active actually during like bear markets like 2022 and things like that. Because when your stocks are going up during the bull market, it's kind of easy to just sit on your laurels and just chill. But this is an opportunity, and that is kind of one of the nice things about value investing is we're not looking at indexes a whole bunch and stuff like that. We're looking at what's going on with the company. And this is something that I think is the opportunity. You look like you give them another 5 years or something like that. I think you'll be really impressed with the kind of capital returns you might get putting it into a business like this. So that being said, thank you guys so much. I'm the Consumer Value Investor signing out. Peace.